Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. And it's great to be here with you this morning, folks. Seth Udinsky, Sam Case, and your host, Mark Manila. Mark, welcome back, brother. Good to be here with you.
Thank you, Seth, and welcome, everyone. We're glad you're here with us this morning. It's going to be another great day with Financial Issues.
We're really excited. Absolutely. Hope you are as well, folks. Hey, give us a call right now, 610-363-1110. Again, 610-363-1110. That's the number to call in. Join us. Every day we're live Monday through Friday, so you can catch us and you can call in at 610-363-1110. On today's show, guys, interesting stuff. Foreign holdings of US Treasuries hit an all-time high a couple months ago. We'll see what's happening there. Also, of course, your calls and questions. We got a lot of questions lined up that we'll get to later in the show. But first and foremost, gentlemen, I want to wish you a happy anniversary. Happy anniversary to the one-year anniversary of when our country was saved. Now, happy anniversary to Trump's 1 year of his second term.
I believe it's called a Trump-iversary.
It is. I believe
a Trump-iversary, and it's the biggest anniversry you're ever going to see.
Incredible.
Well,
I've never seen like it before.
He'd never say that, but people are telling him that, right?
Yeah. There's people telling me it's the biggest anniversary ever.
Absolutely. Radio audience, you're missing out because we have a wonderful picture of Trump celebrating with his birthday cake there. His
That's
one-year
awesome.
anniversary.
That's a real picture.
Yeah. You folks, listen, you really have to get our live feed on financialissues.org/watch, and you can catch those wonderful images that we have on the screen. Mark, let's try to make some sense of this here, though. You know, it's been 1 year. What do you make of President Trump's administration, particularly from a financial and economic perspective?
Well, there's so much to touch on that, Seth. I really believe that, first of all, it's been 1 year. Let that sink in. It's only been 1 year.
Feels like
since
10
Trump
years.
was elected. And why does it feel that way? Because so much has gotten done. So many changes. We were right on the edge of falling off a cliff into communism, into socialism, into losing all our rights, into anti-God, anti-Christian, anti-family, anti-capitalism, anti-freedom. We were so close to losing it all to the communists and the socialists from the prior administration that we're running that administration from the dark shadows and even out front at times. So a lot of people don't even remember how close we were to that and how bad it was getting, how it was wrong to even open your mouth if you disagreed with them. You would be prosecuted or thrown, arrested or rioted against, where people would be doxing you, you're kicked off your social media if you had an opinion different than the administrations. It was terrible. It was awful. And look what we are today. That's why it seems like it was so long, because so much got done. And the thing that bothers me the most is the media, the way they keep saying everything in a negative way. No matter what comes out, they make it sound terrible. I have here a list of things that have come down in price from their peak during the Biden years. Now, think about this. They came down in price. They didn't just slow down in how fast they're rising as the media, when the media said, well, Trump will never get this inflation under control. In fact, his tariffs are going to make it worse. Everything's going to make it worse. Well, that didn't happen. Actually, the inflation came down, which doesn't mean prices come down, but it means the rate at which prices are rising came down. Biden ruined our country for a while. He wounded us really bad with the inflation by making everything go up in cost and not having the wages, not being able to keep the wages going up equally with it. But so as soon as Trump was able to bring down inflation, which was very quickly, by the way, they started saying, well, it's not that inflation has gone away, it's just that it's slowed down and we have this affordability problem. Well, that's just not true, because in reality, prices did come down. We actually saw deflation in certain areas of consumption, and that's very important to know. Serious deflation, and that's what needed to happen. For example, Used cars and trucks down 20 to 25% across the board. Not slowing down 25% of how quickly it's raising, but actually coming back 25% from the peak of where it was during the Biden years.
Wait, so Mark, that means
huge.
I don't have to take a second mortgage to buy a car?
I didn't say that. That may be still true. What about shipping?
But that's no joke, yeah.
Yeah, shipping and freight rates, the being able to send stuff places, companies being able to ship their goods down 75%.
You know, Mark, you're the only one I've ever heard talk about this. I've heard so much about how, you know, in the Trump administration right now, inflation has cooled off, but none of this about the deflation. It's really remarkable.
Well, and, you know, Sam, I can remember us talking about this, Mark, before you came on. It was into the first couple months of the Trump administration. And one of the things we were saying, Sam, was, hey, we're waiting on Trump to make do on his promise to make things more affordable. Apparently, it's been happening. It's just not a lot of people are talking about it.
Yeah. Well, here, what about this? Lumber down 65% from its peak during the Biden years. Lumber, that we're talking about construction lumber to build houses. Why do you think that houses will come down in price? Why do you think that all the builders are starting to talk about building starter homes now? Because they can afford to build them and price them for starter people. Because the cost of lumber, the cost to ship that lumber, and the cost to buy the trucks necessary to get to the work site are all come down. Think about that. And then gasoline down 40% from its peak. That's hits all of us, and it hits everything. Now, all these I'm talking about, there's a lot more, by the way, but all these I'm talking about, when I put this together, all the explanation of why it came down was negatives. It's normalizing now, not because of Trump, not because of any of his policies, not because of anything like that, but some of it was even negative stuff. And
sometimes they say, despite Trump, this happens.
Exactly, despite what his tariffs, that was used several times. It's despite the tariffs and despite the taxes and despite, you know, it just was crazy. But I mean, we just have natural gas down 50%, consumer electronics down 15%, apparel down 7.5%, furniture and home goods down 12.5%, appliances down 7.5%. This is down. This is deflation of price, not just slowing down on how fast the prices are rising. So he did bring down the inflation rate, but he also brought down the prices. The levers they're pulling, the things they're doing are actually bringing it down. So all that was happening within the first year, and that's very important to think about. Realize that this administration has only been here 1 year now. And with all that has been accomplished, despite the constant attacks, sabotage, the media attacks, everything, they didn't just put a Band-Aid on it. They started rebuilding and immediately started changing things. And think about this. I wouldn't have thought this could happen as quickly as it has. And there's a lot more to come because really they just started work on the infrastructure. Imagine a ship dead in the water in the middle of the ocean. No, worse than dead in the water. Dead in the water and sinking. You can't turn that ship because it's not moving, and you can't do anything with it. So the first thing you need to do is make sure you plug the holes so that you have less water coming in than the pumps can pump out. So you have to start fixing it. You have to start building it. You have to build an engine or get the engines running. And so you stop it from sinking first. You stabilize it. Then you get the engines running so it starts moving. Then you can start turning the ship. That's everything he's been working on. This administration's been working on this year. And in doing that, we're starting to see glimpses of light and everything in things like we just talked about, the decreasing of prices, the decreasing of inflation, the way we have real wages. We talked about that, real wage increase instead of decrease, where inflation is more than the wage increase. During the last Trump administration, we saw incredible real wage increase. During the Biden years, the whole time we saw negative wage increase. Wages may have gone up, but inflation was higher than that, so you actually lost purchasing power. Then Trump gets in the administration, and within the first year, we have real wage increase. It's incredible. And that's why it seems like it's been 4 years, 12 years or whatever, because it's just been incredible. And it just keeps getting better. Now imagine once they get all the infrastructure done, the power plants built, all the infrastructure for the technology, for the server farms, for all the AI stuff that's going on. All the money starts really getting done. The factories get built. Then we're going to see even more. It's a great story, people. We can praise God for this because really we know it's God's hand. Trump is just an instrument, just like all of us are. We need to praise him and thank him. And happy anniversary, Trump.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That he loves all of us. He died on the cross to pay for our sins. That he will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachourschools.com.
Bring back free speech to America.
Zuckerberg drops a bombshell, reversing Meta's content moderation policies.
I started building social media to give people a voice. It's time to get back to our roots around free expression on Facebook and Instagram.
Times are changing, and it's the everyday American who is pushing the changes.
People have had enough of what these companies are doing.
Money talks, so why not have it represent your values? Get started at financialissues.org.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Hey folks, today's show is brought to you in part by our friends over at the Timothy Plan. Timothy Plan is amazing. Pioneers of biblically responsible investing. We stand shoulder to shoulder with Timothy Plan. It's an honor to fight against the darkness of this world with them. So you can check them out, biblically responsible mutual funds and ETFs, retirement plans, all the good stuff, timothyplan.com. Mark, I think we'll be talking about Timothy later in the show because we have several questions concerning some Timothy funds. So we'll get to that a little later on. Right now, Mark, we've got a call coming from Florida. Jeffrey is calling us from Florida this morning.
Welcome, Jeffrey. What's on your mind this morning?
Good morning. Yeah, good morning. It's a beautiful day in Florida, and I'm so grateful that you took my call. I've got a quick question. I'm actually a professor of economics here at a college in Central Florida, and I just noticed the price of silver at the U.S. Mint. If you want to get a silver round, they were asking the lowest was $163, which is super high above spot. And I'm wondering what your thoughts are.
Yeah, what do you think that's because it's a numismatic and they're pricing in the idea of it's a collectible because it's a round, and it's
Yeah, usually they do it above maybe $5 above, but now $60 to $70 is significant.
Yeah, I have no idea. That's a good question. We're going to have Michael Friedman on tomorrow, and
Mark, that's Kevin Friedman. Sorry.
Kevin Friedman on tomorrow. And we're going to be talking about that a little bit. So I'm going to ask him that same question, if you don't mind. I don't have any insights on that. This is something new to me that they're pricing it so high. What's your theory on it?
Well, I've been, picking up silver here and there. And I told all my church friends, you gotta be buying silver a couple of years ago. It has gone absolutely crazy. And my thinking is that the ETFs, there's more paper silver than there is real silver.
Right.
And silver is so important in construction and manufacturing, particularly with electronics and where we're moving these days. So I think that there's just this huge demand for silver, and we are not able to provide that at this point. The prices are going up, so delivery is costing more than the paper.
Well, absolutely. Actually, it used to be that paper was cheaper if you went into a ETF that tried to track the spot of silver. You would do better in that because the cost was less. You didn't have to ship the bullion around, Now it seems like the physical silver is worth more than the options that they have on them, which is a total reverse from almost anything I've ever seen in my life. So you're absolutely right on that. And I believe you're correct with the supply is very limited compared to the demand which we have. Part of that might be because of the physical ETFs that are out there now and because of the hoarding of certain banks and countries. Part of that might be because China also, I'm sure you're aware of this, they stopped exporting silver. They've changed what they do and how they sell in their silver. So it's getting very sparse and the demand is great. So I think you're right. I don't know if this is an indication of where the price will go. I don't know if our government's that smart to be able to think about that. But I do know that we have less than half of what we need right now in supply for just the electronics and the server farms and everything going on. So I think you're keen in on something very, very important, Jeffrey. And tune in tomorrow because we're going to have some insight. I believe it's still okay to be buying silver right now. I have to tell you, most of my silver was bought at about $17 an ounce. So, he
bragged.
He bragged. No, I really think it may be good because this is different than it's ever been before. I know I hate even hearing that remark. This is different in that this is a material that is needed. Until they find something else that can replace it cheaper and do the same thing silver does with electronics and technology, it's going to be really low in supply. So it may stay up this high or go higher. I don't think this is a manipulated buy. So thank you, Jeffrey. Appreciate your call.
Thank you. Bye-bye.
Bye-bye.
Mark, it's good to hear from a college professor. That's pretty cool. Jeffrey. Yeah. Professor Jeffrey.
And he nailed it too. Yeah. He was right on it. He's seen the trend. He's seen what's going on. Supply and demand is really big. And I've never seen silver like this before. I know, I've seen some manipulated silver in my lifetime in the 80s and stuff, but and it dropped like a rock when it dropped. But I've never seen it needing the supply that we could not keep up with.
Mark, I've heard you mention that before, the potential for manipulation. How do people manipulate the silver market?
Yeah, because my thought, Mark, is alchemy. And I don't know if that's what we're going for there.
Well, I think alchemy would be a good way.
Sure.
The way technology goes and the way we're able to create new minerals or whatever by just putting together different protons and neutrons, and I don't know how they do all that, but it's incredible to me. There may
Seth, you thought the alchemy was a joke, but turns out it's real.
It's actually, yeah, right.
It is actually real, but I don't know at what price does silver get so overpriced that it's cheaper to manufacture something, And again, I always go back to aluminum. Aluminum was more precious than gold at one time till they figured out how to make it instead of mine it. So... keep that in mind. That could happen again with another precious metal.
Absolutely. Good reminder there, Mark. A somewhat related headline here that I'm seeing. It looks like foreign holdings of US Treasuries hit an all-time high in November. Sam, can you give us the details of this here? What's been going on with this?
Sure. So foreign holdings of U.S. Treasuries, they hit $9.36 trillion in November. That's up more than 7% from the same time in 2024, November of 2024. That increase was largely driven by the countries of Japan, the UK, Belgium, and Canada. But on the flip side, China, their holdings of U.S. debt fell to their lowest levels since 2008. So to kick off this conversation, Mark, can you first explain just how do these U.S. Treasury holdings work, and what does the rising ownership actually mean for the U.S. economy?
Yeah, well, most people know what treasuries are. They're debt issued by the United States, and other countries will buy our debt just like you or me could buy a treasury, a 5-year treasury or something like that, a 2-year, whatever you wanted to buy, you could buy that. Well, obviously, we pay interest on those. If countries started dumping our debt or not buying it, we'd have to raise the interest rates to make it worthwhile for them to buy it. If the rate got too low, they would, unless they were just looking for pure safety, and the United States still hasn't gone over the cliff with their debt, which they're very close to doing. People would, the main reason countries buy our debt was for safety, to shore up their currency, to shore up their country, their monetary system. China may be trying to devalue the dollar by dumping the debt because they were the main holder of our debt for a while. We're seeing other countries, our friends, actually buying back into it. So they still believe in us and they are backing it. So as China starts dumping it, we have our friends, our neighbors, our partners in the world that are buying it up to help keep it stabilized so the dollar doesn't crash, because they know if the dollar goes down too far, if we stop being the currency of international trade, if it turns into the yuan and things get crazy, we lose that power. We no longer stabilize the world economies. It could get really crazy. So other people are buying our debt, hopefully for 2 reasons. Hopefully because it's still secure and safe, and 2, to make sure that China can't manipulate the U.S. dollar. So that's what I see going on here. And I think it's wonderful that we have friends now owning our debt more than enemies.
So, Mark, I hear all the time about the risk of devaluing the dollar, a weakening dollar in the world stage. Does this bode well for that? Does this mean that the dollar is a little bit better off than some people fear?
Yeah. This is actually, to me, an indication that we don't have, even though, last year I harped very hard on our debt, and the debt is worse today. So I really believe the debt is the most triggering thing. If we
just saw a headline, it's nearing $39 trillion.
Right. If we default in any way, if we miss interest payments, if we're not able to maintain our debt, I think I read somewhere that almost half our budget is getting close to just paying interest on our debt. Debt can destroy our country. So if somebody starts dumping all our treasuries and we have to raise the interest rates on our treasury, it means we have to pay more interest on our debt, and that could force us closer to that default that I'm really concerned about in the future here. So having friends, having people that still see the United States as stable at this point has really kept that from accelerating, and that's where we're at right now. I still say, Congress, get off your butts. Let's get this done. Let's get our debt reined in. Please, God has warned us about debt. As individuals who love God, Christians who know we're saved by grace, we believe in God's word, and we need to be sending people to Congress who believe in God's word and who will do what we need them to do. And that's get this debt first under control and then reduce substantially.
Mark, a question for you with this. What's the relationship between moral character and financial wisdom, I'll call it? It seems to me like people of high moral character tend to also, by God's grace, be more financially wise. Is the solution for us just trying to find people who have high moral character, or do we actually have to really do some digging and look for it? No, we just need some people who understand debt, how it works, and get them voted into office. What do we need to do?
I think you just said it exactly.
Yeah. Okay.
We have a responsibility. We talk about stewardship. Have you ever thought about what God calls us to do when he gives us a country that gives us freedom, just like he gave us freedom to choose? eternal life or to reject it. Like he gave us freedom, the freedom to live a life that honors him or not. He doesn't force us to do this. He gave us his freedom. Then he gave us a country to do the same thing. We have a stewardship responsibility here to find the right people to put into Congress. If it's not you and me, we need to exercise our stewardship abilities, the wisdom he's given us, not just to vote along party lines, but to vote for people who really understand God's tenets of love, who understand God's understanding. He created everything, including the physics of money, and he wants us to live. He's warned us about debt. And as a country, that warning should be amplified. And we need people in there who believe, as the Bible states, that God is warning us against debt. So very important. As stewards, we have a responsibility to do that. And I know that you agree with me because you're a partner and you're a listener. 610-363-1110. Give us a call. The lines are open.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever he calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
My baby was like this big. He's like this tiny little spectrum of hope and this unnamed beauty, in a sense. It was poetic. And I saw his heart beating on the screen. And I mean, I went from, I don't want this baby, it's just a fetus, it's just cells put together, to talking to my child on the screen and feeling really protective and knowing that there's life growing inside. I mean, that sonogram changed my life. I went from just Candace to mom. I'm a mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Before investing.
Welcome back, everyone. 610-363-1110. You can fill up the phone lines right now, folks. Give us a call. 610-363-1110. Markets were closed yesterday for the Martin Luther King Jr. holiday. The pre-markets seemed a little bit nervous this morning, according to CNBC, so take that for what it's worth. They were all really scared because of the stuff that Trump is doing with Greenland. They've opened all in negative territory. The Dow, the S&P, and the NASDAQ all down well over a percentage point mark. So we'll see what comes of that. You know, it was an interesting conversation that we had in that last segment, Mark. We were talking during this break here, and I brought up the idea of can we equate moral character with fiscal responsibility? Because oftentimes what I will see, and I'm not saying this is always the case, but someone who has a high moral character, usually that means that their character is defined by the Word of God. There tends to be at least a desire to be fiscally responsible, if not the ability to. But occasionally you don't see that as well. And I want to just get your guys' thoughts on that, because that's oftentimes what I see, especially when we're talking about, okay, who do we vote for? We should be looking for people of high moral character, but shouldn't we also be looking for people who know what money is?
Well, I think you're right, Seth, that when there's high moral responsibility, there's probably a good chance there'll be fiscal responsibility in that person as well.
Yeah.
First of all, if you have a high moral values, you won't steal, you won't cheat, you won't make your money in a way, take advantage of people. You won't do those things. So your margins, you don't have the margins to make the mistakes, so you're fiscally better. You won't have a lot of interest to pay because you couldn't afford to do that, like those who just steal money and cheat people and con people and stuff like that. So I think it goes hand in hand, actually.
Mark, I think that's why it's so important to just to clarify, we're talking about fiscal responsibility, not necessarily fiscal success, because people can be wildly successful with money, but not have the best moral character at all. Sometimes they're actually the worst people.
Yeah.
Right. Absolutely. Yeah. I think during the break you brought up something about somebody in the Senate, didn't you, Sam?
Yeah, just a little somebody. But speaking of fiscal responsibility or lack of it, remember all those Doge cuts that Elon Musk was making? Well, Chuck Schumer in the Senate says, let's just undo all that. And in fact, let's go even harder. Let's bring all of that money back and then spend even more money that we don't have in the first place. He said, quote, if you look at the budget we Democrats are working on right now, we restore most of the Doge cuts and then go even higher than previous years on many of the programs that Doge originally slashed.
So do you think the opposite might be true here, Seth, where if somebody has no fiscal responsibility, that maybe they're morally wrong
Mark,
as well?
that's the point I was really kind of getting at there, is it's no surprise that these are the same people who want to murder babies in the womb and want to trans children, is that they also don't have the moral capability to understand how money operates. There is a way that God has laid it out for us, and there's a way to do it well. And going into unnecessary debt, just spending other people's money, by the way, this is the taxpayers' money. It's not even theirs to spend. It's really ghastly.
Well, they're being bad stewards of the money they've been given responsibility over, our tax money.
Yeah, and you know what? We go back to it. We can blame Congress like I do all the time. We could blame the administration. We could blame the local politics. But it really comes down to you and me. We have a stewardship responsibility to put the right people in, to lead this country, to honor God in the way they lead this country and allow his blessings to flow. That's the bottom line. As stewards, this is part of our responsibility.
Amen. 610-363-1110. I appreciate you sharing that, Mark. Let's get to some questions here, shall we? We've got Linda. Linda is 74 years old, and she's asking this. Hey, Mark, I have a question on UBTI taxes on REITs. I own 6 REITs that I bought this past year, so I've never encountered the UBTI taxes. And, Mark, just to clarify, Linda does not clarify if these are REITs that are still on the buy list or once were on the buy list, but they're REITs that she owns. Is there a specific date that the tax forms for the UBTI tax are required to be sent out?
Yeah, there is. There's absolutely. I think it's the end of January, just like most of the documents you need to be reported on. There's a few that don't get sent out like that. But I wouldn't focus that much on it because I don't know what reach you have, but and maybe we made too big a deal of it last year, Seth, when we were talking about UBTI. I think we had one REIT somewhere that did end up being UBTI, and somebody was holding it in an IRA, so they had the UBTI tax inside an IRA, and they got confused on how that all works. And I get it. It's generally not a big deal with REITs. REITs generally don't get hit with UBTI. Occasionally they will, especially if it's the way the structure is made and the ownership of it. Generally, this is with master limited partnerships and stuff like that. But yeah, you'll get your documents in time to do your taxes, and that shouldn't be an issue.
And, Linda, I found, oftentimes many of these forms can be accessed electronically. Usually early February is the time. So be prepared for it because, the next couple of weeks you'll be able to get those.
Your brokerage, your platform that you're investing on, they'll get it to you in time, probably with your 1099s.
Yeah. Good stuff. Next one we have here, Mark, is Jordan. Jordan's asking a good question. He's saying, Mark, do you consider a bond fund not biblically responsible, even though we're not taking ownership in any of the companies? And then maybe how about a CD in a bank that's not biblically responsible? Again, we're not taking ownership of the bank. What do you think, Mark? It's a good question.
It is a good question. And unfortunately, part of the logic in there can be confusing because ownership isn't the only thing we look for in our investing. Remember, we're stewards of God's money. Imagine if you would, some soldier over in Ukraine. Now, let's go with something we can really relate to. Iraq. We had soldiers over in Iraq. Imagine a soldier over in Iraq in a foxhole somewhere, writing home to his wife, and dear Sally, I want you to know that things are really rough over here. 2 of my friends are being shipped home in a coffin. One of my friends, he's lucky he's getting shipped home, even though he lost his leg. It's been pretty brutal over here. But the good news is it seems like the enemy is running out of money because we found these leaflets where they're issuing debt. They're issuing bonds, and they're paying really high interest rates on them. Hey, maybe we should invest in these. Sure, maybe funding the enemy might get me killed, but think of the money we'll make. I mean, this is just ridiculous. Nowhere in the Bible does God say to fund evil, no matter how it's funded, whether you're partnering with it through the ownership of a stock or whether you're lending money to him. God doesn't say to lend money to the enemy. He does say to feed him. He does say to be charitable in many ways, but not lend money to them. So I would say that what we need to be looking at here is funding. Anytime we're funding the enemy, we don't want to do that. So if you're in a bond fund, that there's a whole bunch of bonds from companies that are anti-God, anti-family, anti-Bible, anti-everything that his word stands for, maybe you shouldn't be funding that, the bottom line on that. When it comes to be a CD at a bank, I get you there because maybe the bank isn't a clean bank. Maybe where you bank at, because there doesn't seem to be any clean banks, maybe there's very few that really pass the test. It's usually a local bank or a credit union that will pass the BRI test. But maybe there aren't any CDs at your bank or at around where you bank. So maybe you need to shop to find a bank that doesn't compromise your desire to honor God in all you do and utilize that bank for the CD. If you can't find a bank like that, it's kind of like your cell phone or your computer that you're on sending this in. There aren't any computer that make great computers that you can get a hold of. So Jesus walked the Roman roads. We have to walk the Roman roads. We're in the world, but we're not of the world. So Jesus drank out of the wells dug by Roman soldiers. Jesus ate with food that was cooked by prostitutes and taxmen. So we're in the world, but not of the world. If we have an alternative and we know it, we should utilize it. If we don't, then we have to say, is this okay for me to invest God's money here or not? Is it okay for me to put it here or not? If you feel uncomfortable with that, if you're not at peace, then that CD, maybe CDs aren't where God wants you to go. Maybe there's another alternative for that. If you're comfortable with it, again, this is between you and God. In fact, everything we recommend, everything we research. Everything we do here, it comes down to your relationship with God. We're not here to tell you what to do. We're here to tell you to take it before God. Get on your knees and understand if you're glorifying God with it, if you're getting closer to God through your finances or not, if you're honoring him with all you're doing. That's the bottom line on it. So great question. Jordan, I really appreciate that question from multiple levels. And I think you're opening up incredible can of diamonds, because that's going to help you grow closer to Christ when you question all things. And the deeper you go, the closer you can get to Christ through your finances, through your investment, not despite them. And if that happens, I'll tell you what, that's a crown for all those at Financial Issues, because we did what we believe God wants us to do and helped you to grow closer to him. The number here again is 310-636-1110.
I got you, Mark.
We'd love to hear from you.
610-363-1110. And yes, we would love to hear from you. That's right. Give us a call, 610-363-1110. We'll be right back.
I heard about Jesus in my public school, and my life changed.
For over 25 years, God has used Crossroads Kids Club to bring the gospel right to where children are, inside public schools.
Will you help us share Jesus with kids in public schools? I want more kids to have the same chance that I had.
Would you help reach more children by making a gift to Crossroads today?
Help reach kids with the hope of the gospel. Visit reachourschools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever he calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back, folks. Hey, listen, Mark, your example that you gave to Jordan's question there about the guy who's fighting in the war is a fantastic one. And I couldn't leave that conversation off without promoting the Wall Street Awakening. In the Wall Street Awakening, folks, there's a chapter that Mark has. It's titled The Bond Connection. If you've got the book, guys, it's on page 72. So it's titled The Bond Connection. Mark tackles this exact topic that you just talked about there, Mark, on the air with this idea of if I'm lending my money to someone to invest, I still need to be careful about that. Mark, I love what you said there. We have to draw the line somewhere. And for us, the line is righteousness and holiness and obedience to God, no matter if you own the company or if you're lending money to them. And I just think that's so important. So Jordan, if you don't have a copy of Wall Street Awakening, just send us a donation of any amounts between you and God. It can be as little as you want or as much as you want. And put in the subject line, I'd like a copy of Wall Street Awakening. We'll send that out to you. If you want multiple copies, let us know. We'll send you, as many as we can within reason. So I think that's
the more hearts we can touch with this. And by the way, Any monies that come in for the books, if you go out to Amazon or anywhere and you buy it out there, those monies go to help people that are impoverished. We don't just give it to them, but we come alongside them. So awesome. Utilize that money to help them.
It's great. It's a great way for you if you want to just play what seems like a small part, but actually might be a much bigger part than you might think, and being able to help in that. Hey, also, Mark, just wanted to mention here too, we do have a lot of listeners who listen to a later version of the show. You're not able to catch the live show. You maybe listen on podcast, or you're out in the West Coast and you catch the show on the West Coast later in the day. I just want to remind you all, you can catch our full live show free. It's for anyone who wants to listen at financialissues.org/live. You can watch it. You can listen to it there at 9:05 Eastern Time, from 9:05 to 10:05 Eastern Time. Of course, on Fridays, we go until 10:30 Eastern Time with our Friday Overtime, which we started last week. It was awesome.
A website exclusive.
That's right. And that is only on the website, so you got to get it there. But it'd be a great thing for you to do, especially if you listen later in the day. If you catch the live show and you want to listen to it again, come back and listen to it again. That'd be a great thing for you to do. But 9:05 Eastern Time every day at financialissues.org/live. /watch. Financialissues.org/watch. All right, Mark, let's get to Charlotte. Charlotte's 86 years old, and she's saying, hey, Mark, are there fees and taxes associated with TE39? I bought some in my traditional IRA and then researched the ADR after listening to the program. If this comes with extra tax paperwork, I may need to get out quickly to not complicate taxes. So what do you think, Mark?
Yeah, the fear of complicated taxes, it does motivate people in their investments. Yep. It is real. The good news is TE39, it's an ADR, American Depository Receipt, which means it's an international investment, but everything's taken care of for you in that. It's all converted. Everything's done properly. So it represents foreign shares traded on U.S. exchanges. TE39 is a company that is based in Taiwan, and it's a technology company. So ADRs may carry a small annual depository fee, but these fees are typically very small, a few cents per share or less. Fees are and they're automatically deducted for you by the custodian, so you don't have to worry about that. You don't receive a separate bill for these or a separate form. So that's not an issue. If they're inside an RIA, there's no foreign tax reporting forms needed. So you're okay is the bottom line of what I'm saying. There's no K-1s, there's no special ADR tax filings, anything like that. So inside your IRA, you're totally comfortable. You don't have to worry about it, bottom line. But it's a good insight to be thinking about.
Yep. Hey, Mark, I need to apologize. I said Charlotte was 86. She's 68. That was a typo on my part. Charlotte, my apologies.
She's coming for you.
You're 68. I know. Listen. So thank you for your grace.
And she has the right to do so.
Absolutely. Absolutely. So, Charlotte, we appreciate you and your partnership so much. Thank you. Mark, here's a good question from a YouTube listener who sent us this question on our YouTube live stream a couple days ago, saying, I've been a member for some time. I just now have a question. What AI stocks do we have that might be okay to invest in?
Oh, it's a great question. You just go out. If you're a partner, you just go out to the Partners Hub, go on to the broad list, and sort by technology, because almost any technology now is somehow involved in AI.
I was thinking that, Mark. What technology stock do we have that's not involved with AI, at least in some small way?
Well, and Mark, that was what I was wondering for this person, whoever they might be, if they wanted to call in, because I'm not sure if they're wondering about actually companies that are specifically devoted to like being an AI search engine, for example, or if they're just wondering about companies that'll be affected by AI.
Yeah, I don't know either, but AI is penetrated in everything, including energy and whatnot. So let me just give you some of the AI buys that we have, things that are involved in the AI orbit of what AI is all about. TE20, TE32, let's see, we have TE26, which is a very big one in there, TE11, That I think that's one of your favorites, isn't it?
That's one of Sam's favorites. TE26 is one of my favorites. Yeah.
And then
I need to get into TE11. I haven't gotten into it yet.
Yeah, there may be some holds in there as well. But these are just some ideas. And that's not going into infrastructure, midstream energy, nuclear power, things like that we may have some stocks in there that wouldn't be listed as technology, but are going to be boosted because of the AI influence, the need for energy, the need for all sorts of stuff. So anyway, yes, there's plenty there. All you have to do is go into the Partners Hub and look. And if you're not a partner, you may want to do that because every week it seems like there's some sort of change. Not every week, but almost every week there's a new buy or something's going from buy to hold and sometimes to sell if they become biblically irresponsible and or something shows up in their balance sheet or income statement that makes us worry that maybe this company needs to get some things in order before we recommend it as a buy again. So all this information is in the back end of the partner. If you're a partner, you can get back there to see this kind of stuff, along with asset allocations, models, and guidelines on how to utilize those, and educational materials. Like we just went through some educational materials last week that should be up pretty soon online as well, with a lot of other stuff. So yeah, you want to be a partner, and it costs so little to do so. It's just what, $132 a year. Yeah. That's nothing. That is absolutely nothing compared to what you pay in the financial industry for this kind of information, education, and guidance. So I hope you'll join us.
Absolutely, Mark. Here's a follow-up question for you. The AI revolution obviously has caused a lot of tech stocks to be pretty highly valued. How much thought should a listener give to that idea if they're thinking about getting into a tech stock right now, but in the back of their mind they're thinking, but it's really highly valued. I'm not sure if this is the right entry point. Nelson, I see you in the chat there. Mark, what do we do with that?
Yeah, that's an excellent question. You're absolutely right. They are really high valued. The PE ratios are really high, but in some of these PE ratios, you'll look at the free cash flow and it's bigger than any companies, that might have no debt and billions of free cash flow. So we have to look at everything together. And though these valuations may be high, they may not have peaked because the future, the potential is so huge for these companies. The backlogs, for example, with some of the chip manufacturers or some of the memory storage facility manufacturers, their backlog could be 6 years, 3 years of backlogs of manufacturing to catch up with the backlog on that. And that just means that their profits and their earnings, their revenues and earnings could be expanding as well as their free cash flows. So that could grow very quickly, which I've been surprised how quickly some of these companies are growing into their PEs. We saw that before in technology surges where strong, relevant companies actually had PEs through the ceiling and they grew into them within years, not in decades. And that's pretty incredible. So there's a lot more to it than just the PE, just the valuation of the stock. And that's some things we try to help with in the back end as well. And of course, on the air here.
It's good stuff, Mark. It's encouraging to me because, sometimes you have the assumption of, well, I'm buying into a stock that's done really well and it's at a high valuation. And I know if I get into it, it's just going to go downward. But sometimes that doesn't happen. Sometimes you buy in and it keeps going up because it's done really well and it's going to continue to do really well.
Yeah. But I wouldn't discount that concern.
Sure.
Because the valuations are historically not, they really are high right now. And so you want to be careful what you get into. You want to make sure that company is made of steel, that its potential has skyrocketed just like its valuation did. Yeah. You want to make sure that they are making money. There's a few valuations out there where they're through the ceiling and they're still not profitable. So you want to be careful with that.
And Mark, if folks want to hear your explanation of that, we gave that as part of our Crash Course series last week. I think it was Wednesday. I'll have to check on that one. But it was great just looking at some of the different criteria for buying a stock. It was awesome.
Absolutely. Our whole goal is to help you to do the best you can with God's money that He has entrusted to you, and giving you the opportunity to utilize that to honor Him by caring for your family, caring for others He puts in your path, and just the way you do it, that you honor God. And that's what I love about our partners. That's what I love about our listeners, is that you love God and you love to honor Him by the way you invest with biblical integrity. Look forward to getting together again tomorrow. Thank you for being here. God bless, and thank you for honoring God with your investments.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.